Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. Hey everyone, Dan here. I wanted to kick the video off today by talking about my reaction to the earnings call. Now, obviously, in last night's video, I talked about the earnings that had come out, and at that point, we were just reading through the release and the report. And since then, I've had time to listen to Anthony Noto and the CFO's call. And I wanted to share some additional thoughts on that. Now, I know that there's a wide variety of reactions to this. Some folks think that the reaction in terms of how much the stock has been beaten down is super overblown. Some folks think that the earnings report was really, really crappy and that SoFi has much, much further to fall. But I do encourage you to share your own thoughts, especially if you differ, in the comments so that people can get a wide range of opinions. All right, so I'll jump right in, and then after this, we'll flip over to the chart, and I'm going to talk about some lockup information. We'll go through the chart and see if there's anything to update there, but that'll probably be a relatively quicker portion of this video, and this will be the bulk of it. So the notes from the call that I have are basically, starting kicking things off with Anthony Noto. The inflection points on financial product loop strategy, 3x the number of financial service products versus lending products compared to 1 year ago. That seemed like it was good news, but also sort of like on par with what I would have expected. A lot of the good news items in this felt to me like, okay, that's good, but from a company at your stage of growth and what I would expect from that growth stage company, these feel like it's just kind of meeting expectations. So not that that's a bad thing, but I wouldn't get overly exuberant about factors that they are saying are really, really great, because I kind of think being able to survive in this very competitive fintech landscape and be able to grow into the company that they want to grow into, they're really going to have to do more than just meet expectations. So we'll get into that more as I go through. So he talks about record revenue despite student loans operating at less than 50%. Members, 113% growth, 123% increase of total products held by members. That to me, a good sign. But again, nothing sort of like earth-shattering. It's just, to me, kind of meeting expectations. Cross-buying up by 1.7 times versus 1 year ago. So to me, this, again, they're touting it as a great point, a great data point, and it is. But to me, again, that's meeting expectations. The entire, one of the largest value props of SoFi from an investor's perspective is that they're creating this one-stop shop, which organically brings with it this ability to cross-sell internally to the same member. And so the ability to have that leverage and that cost savings of not having to market to another member or another future member, or go out and seek dollars from somebody who's not already a member, being able to really increase the value of every single member, to me, again, is just sort of like, yes, that is an expectation that I as an investor have. And so you improving that number, great. That's what I would expect. Galileo more than doubled accounts. Okay, to me that feels expected. Financial services, 2.5x increase. That to me was a good sign. I would still like to see these three segments really start to converge and contribute more equally to the overall revenue and membership of SoFi, because I think being overly leveraged in this loan space, even though the LTV of those folks that are taking those loans is very, very high, I think that they, from the perspective of a publicly traded company, especially as a growth company, they're going to need to do a lot more with bringing in membership and really growing that membership number. That was, to me, the biggest disappointment, was how little the growth in members was. And I know a lot of folks will disagree with that, and that's very, very fair. But I think that the next big hurdle for them to overcome is to become more well-known of a company, which is going to just require more membership, more people to be a part of SoFi. Because again, if you think about bringing them in and then cross-selling internally to the same members, you need to first get that member. So I want to see that membership number grow significantly before I can get excited about much of the other stuff, because the cross-selling is great and the number of products that each member is consuming, seeing that increase is great. But to me, still having less than 3 million members, a lot of what I think Wall Street and the marketplace judges these growth stage companies on in this type of a product is the numbers in which they can bring in membership-wise, and then figuring out how to monetize them and how to cross-sell to them and how to really grow revenue from each member. But I do think that there's a premium placed on just being able to get that member first. So I would really, really like to see them focus on that much more heavily. He talked about re-engineered fraud and income verification algorithm to help tailor loans. To me, this is great if it's perceived by the customers that way. In other words, if customers think, oh, wow, it's much easier and much more applicable to my situation to go get a loan from SoFi than it is from wherever else you can go. I think the degree to which they've re-engineered their algo to accomplish that could be fantastic. If it's not really perceived that strongly in the marketplace or by the membership or prospective members, then to me, there's the risk in a business like this, I think, of trying to boil the ocean. And trying to do too many things can sometimes lead to doing things that you think will have a really strong impact, but when it actually hits the end customer, it doesn't. So when I first heard that, I thought, that's really, really great. But then my next thought was, well, it's really great if the person who's applying for the loan has that perception of what you think that they should be perceiving. So if it does work its way through to that end customer, great. If not, I do worry a little bit about the decisions that are being made that they think will have an impact in a certain way and they just don't. And there will be some misses along the way of those things. It's not that I'm expecting anyone to bat 1,000, but I'm just trying to temper any sort of bias that wants me to get overly excited about that. Now, the measurable thing that he did say that makes this re-engineering of the algorithm great in my mind is that it resulted in a 30% higher approval outcome with no negative impact to SoFi. So they were 30% higher approval, but without getting crappier loans in their system that then were riskier to them. So if the degree to which that's true and that can even grow, I would take the perception of the member out of it. If it just does that internal piece of the puzzle, if it can accomplish that, I think that's great in and of itself. Then he talks about a slew of additional requested or clearly beneficial improvements to tech and processes. That's great. Ease of use and things like that. It talks about focus on member capture through financial services product and then leveraging cross-sells. This is sort of what I was talking about. I still don't know, even after having listened to it, if he feels as though they have spent the quarter or they have started already to focus on member capture through financial services, or if he feels that that's sort of like a forward-looking thing. My sense was that he thought that they had already started to focus on that and that they were very pleased with the increase in the membership, which, again, maybe my expectations are just kind of off base, and so be it. I'm not going to move the entire market for SoFi. So if my expectations are off, that's fine. But I would expect that they continue to push that much, much harder because, again, still being trapped under 3 million in membership, to me, is a big detractor and is potentially keeping institutions out. I don't know. But even just sort of fundamentally speaking, the less folks that are engaged with the product, the less folks are aware of it, the harder it is to even just get retail or whomever jumping in any meaningful way, shape, or form. So I think the extent to which it helps their bottom line by having more members and the cross-selling opportunities, it also helps, I think, the stock in and of itself, because folks will know of SoFi and will at least give them an opportunity to look at it and see if they want to invest, especially these days when retail investment is skyrocketing. Insert rocket emojis. No, don't do that. So then things flipped over to Chris, the CFO. He talked about 7x financial services from this point last year. Okay, again, like that's great, but again, to me, that feels just kind of meeting expectations. They raised their guidance, even though the CARES Act will extend through end of year because of momentum in other areas to the tune of 52 million. I think the 52 million was the one-time cost that they had associated with Apex, and 40 million was maybe what was peeled off of loan repayments. I would have to go back and recheck that. My notes here were not superb, but I did think that it was really, really positive, talking around raising the guidance for the next quarter, even though the CARES Act is extended through or to January, whatever. And so even without that, they think that there will be enough momentum and enough growth in the other areas that they're raising the guidance. So again, to me, raising guidance because things outside of loans are growing, that to me is actually more interesting. And I think that is a phenomenal step in the right direction if they can execute on it. That's always the question here. Then I skipped to just the last 3 points come from the Q&A. Several one-time detractors. Galileo on-premises delayed a payment from a customer, and that apparently was a pretty big hit. And then the Apex equity investment that was called back. So that might have accounted for the 52 million. Maybe it was 40 million in the Galileo on-premises. I don't remember. Go back and listen to the extent that it matters, but I'm pretty sure that 12 million of the 52 million was the Apex investment being called back. So great app with SoFi money for being able to provide competitive offers. Oh, okay. So the note I was making here was that I think it's a great potential that, or like a great application for SoFi money to be able to provide competitive offers based on what bills are being paid. So they're talking about being able to see what folks are paying and then be able to try to analyze that and send them competitive offers if they can see what they're paying month to month or week to week. And that could be a great step up in being able to cross-sell. I think a lot of this is going to be reliant on cross-selling. You're talking about bringing everything under one umbrella in a one-stop shop. Well, the advantage there is that you can cross-sell, right? And so I think that they have that piece down. The piece I kind of worry that they're missing is you gotta be really flooding the gates with these members. And I worry that they're missing that component or that they're not focusing on it enough. And also being able to finance loans through FDIC insured deposits, that would be a phenomenal step. That would be a big step in the right direction, and that would really help out. That to me would be a good reason to keep amping up the loan business if they can make that swing where they're using the FDIC insured deposits to fund the loans, to finance the loans. That would be phenomenal. That would really help increase the revenues and the gains that we could see in future quarters. Taking out one-time expenses, EPS would have been minus 5.8 cents, I think, or estimated to be, or 21 million net income loss. So kind of trying to, maneuver things a little bit. I think from a sentiment and from the perception perspective on Wall Street, it's hard to kind of talk around that miss, or not even miss, but just the way in which that was delivered. And so that could still continue to be challenging, but we'll talk about that when we get into the chart and sort of like what the stock itself looks like. This is meant to be more focused on the business. So, I'm interested in Q3. This to me feels like a bit of a mixed bag. Generally, then I'm sort of landing on the idea that it's sort of a meeting expectations thing to me. I feel like they were pretty excited about the growth numbers that they thought they had, but again, my own perspective, I would have expected those things, so I'm not going to get overly hyped about those. And again, my biggest concern at the moment is the members. Like, where are the members? Bring them in, get them using your thing, even if it's for free, and then start cross-selling them. But you got to get more than 3 million members. I mean, you're not even to 3 million yet. You have to get to 3 million, and then you have to 10x that is my thoughts. And then I think things will start to be interesting. So those are my biggest concerns moving forward, but we'll see what Q3 brings and go from there. All right, so we're going to finish off the video with the chart. All right, everyone, we're about an hour after market close on Friday, August 13th. We're going to do the charting portion of today's SoFi video, and let's jump right in. So a couple of things to note. This previous uptrend support line that we had in purple, that could be an interesting factor in play, as it could be maneuvering itself to uptrend resistance, which is what we saw today. Now it's just one candlestick, so I don't want to overemphasize on that, but if it continues to move up and bump its head on this, that could be interesting, especially if it's able to flip it to support and give itself some upward momentum. But that feels like a big ask at this point, given the fact that we're down 14% today off of a pretty brutal reaction to earnings. And of course, you know what my take is on earnings at this point. But the other thing that I'm looking at is this purple bounce zone that has held up for a while, has held up since this most recent dip anyway, and provided us bounces subsequently. I'm looking to see if it can do the same here. So it's dipped itself into that bounce zone today, and you see the wick extending into that bounce zone. So I'm hoping the extent to which this could still be an active bounce zone, that would be phenomenal, and that could provide some support. Now, if it can't blow that, the 1465 is my next support level down. If it dips below that, then you see what I have down here. 1311 is a potential zone, but there's not a lot of price activity in here. You see it just flying up, and then it briefly bounced off of 1311 there, and the only other one would be right around here on 1414, which was where we caught that first run up with IPOE running up into the merger on that hype and on that short squeeze. So kind of no man's land below 1465 to 1311, and even then that 1311 is quite questionable. The next true supply and demand zone that we have any sort of like verifiable like volume with is that 1206, but I mean that would, you know, even then that's like minuscule. So it's getting into uncharted territory if we can't hold that 1465 or get a nice bounce off of this purple zone. But to me, Monday will be telling to see if the market generally thinks that today was an overreaction, or if they generally think that no, this is the right direction for SoFi given the reaction to earnings. So 59.5 million in volume today, and obviously a ton coming out in sell volume. Now, interestingly enough, we did see a bunch of large-scale orders come in. Very few large outflow orders, quite a few, I mean, for SoFi, quite a few large inflows. So could this be institutions coming in to SoFi on this dip and saying, okay, like we know what we heard. You know, I did hear the Q&A section, obviously, of the call, and to me, it sounded like the analysts that were on the call seemed generally happy. So to the extent to which they persuade or sway institutions at all to come in, that could be interesting. Also, if Noto and company are going out to try to talk to investors now that the earnings has passed, that could also persuade some institutions to come in, could supply at least some stabilization, if not some buying pressure to the upside. Obviously, if those are effectuated in the dark pools, we may not see it clearly reacting on the public market, but we'll tackle that and more next week, of course. But yeah, that's what I'm looking at the moment. The MAs at this point are going to be providing additional resistance on the way up. I'm going to leave this white in this red zone. It'd be interesting to see what they do when they get there. Ideally, it would blow through this red zone if and when it gets up there, and then could see additional stickiness in that white zone as it has in the past. The MACD obviously curling back down. It hasn't squashed all of the bullish momentum yet, even though it was really sucked the air out of the room today. But no bullish crossover yet. It doesn't have a great history of being able to come down and then have a great bounce off. This is probably the best example of it. But this was forming a much more bullish move. So to me, this area is more reminiscent, though not exactly a copy of this area here, which is a much more aggressive move up. And then when that turned, we saw that drawback all the way down to like 100% retracement from that move. So we'll see if that happens. But it is just about drawn back down to 100% retracement at this point anyway, just off of one day, because it was such a catastrophic down day today. But we'll see. We'll see what happens on Monday, if we get that bearish crossover, or if these two kiss, or if this decides that it's going to bounce off. It's still sitting well below the baseline, so sort of give us an indication of how much sell pressure is really there. RSI obviously taking a nosedive. It had established up above the midline, not super significantly, but it was moving up in this nice bullish fashion. So again, it's a big peel off, and obviously it's a big catalyst in the stock, for the stock, I guess I should say. But it'll really be interesting to see how it can counteract all of the bullish momentum and bullish indicators that the stock had been accumulating for a couple of weeks leading up to this. Now, in sort of like a if I could take a moment to sort of editorialize additionally here, to me, this is an interesting sort of challenge for SoFi the stock. So the first half of the video talking about the earnings call, that to me is SoFi the business. Talking about just SoFi the stock and how it just reacts as a stock. This is interesting to me because it's the first big super letdown that it's had, at least that's how it's reacting. That's not how I'm reacting, but that's how the market's reacting clearly. And obviously this was selling pressure from lockups ending, but to me, this is the first big negative catalyst as far as the market seems to be reacting to it. And so it'll be interesting to see, in the face of, or in the immediate fallout from what's being perceived as a negative catalyst, what does the stock do? Completely irrespective of the company, what does the stock itself do? Where does it find support? Where does it find a new sort of trend? Is that a sustained downtrend? Is that bouncing and returning to an uptrend? What is it? I'm really, really interested to see what that is. I think it'll tell us a lot in terms of how the market feels the stock should be priced in conjunction with news catalysts, or news items and catalysts from the company. So sometimes I like to think of those as sort of two separate things, because sometimes they can act completely independently from each other. So I think it'll be an interesting data point. Now, I was looking for, obviously it left a huge gap down here. And if you've seen my other videos previously, not specifically SoFi, but other tickers, some stocks react really strongly to gaps, meaning they tend to fill them relatively quickly. Now, SoFi to me does not look like that. You see a gap here that still remains. You see a gap here that, if it was filled, that gap came about on February 23rd. That wouldn't have been filled until June 1st. So to me, SoFi is not a gap filler, at least not for the time being. Maybe it will, and if so, maybe it would start that trend. But to me, there's not a historical indication that it is. So that doesn't give me a lot of hope that in the coming week or weeks, this is going to run up even from the perspective of filling that gap. So I'm going to set that aside for now. To me, right now, the biggest things are, does it bounce off of this previous bounce zone in purple? If not, does it hold the 1465, which is basically right next door to it? And if that doesn't happen, then how dangerous, because it looks dangerous to me, but how dangerous is this space from 1465 down to 1206? So, those are the things that I'm looking for from the chart. Now to quickly flip over the other things that I'm looking at, we did see a big peeling off of the shorts today, so I know I had alerted to that. We keep a close eye, and I will still keep a close eye on it, obviously, but they're peeling back because of the drawdown today. I'm sure a bunch of them closed out positions and locked in profits. So until there's like a significant jump up, I would be surprised if they come and pile on very, very strongly, because I don't think that this reaction to earnings is going to be seen as appropriate. I could be wrong. And if it is, then shorts could pile on and say we can drive this down further. But it'll sort of depend on what the perspective is there. Now, the other thing to be aware of that I'm going to be looking out for is this. This is from the SoFi investor relations call notes. If you haven't seen that video, go back and look at it. But this was from Deanna, the VP, Associate General Counsel at SoFi, asking about lockups. She said that no employees or big investors could sell shares 2 weeks before earnings until 2 days after. So I guess that would be meaning that they could start selling on Wednesday. And that is further supported by this email that I had been sent by somebody who said that they were a previous employee at SoFi. And the details that they had there were for past employees after June 27th, they could sell, but for current employees that date full into the end quarter blackout period, so they can't sell until 2 trading days after the release of the Q2 earnings report. Now that sort of structure tracks also with my experience of notes that I received from a company that I was a previous employee of that then went public. There was very similar situation with them. So it made sense to me at the time, and then was further backed up by what Deanna had said on this phone call. And so I would be watching for what happens on Wednesday. If there is additional pressure that comes in from folks selling. My hope is that, my bullish hope, but again, just realize just because I'm hoping for bullish movement does not mean anything. The market will not move because Dan hopes that the stock goes up. It doesn't matter, right? But what I'm going to be looking for, if I'm looking for any potential bullish signs, are clearly bouncing off of this purple zone. Okay, we're in it right now, so we'll see what happens. And this continuation of large scale orders picking up through next week as well. And that could help offset selling pressure from lockups. And those are mostly current employees. There may not be a ton of shares available to sell. I don't know what that number is. They, as you can see over here in the notes, they wouldn't give the numbers. And so we don't know exactly. But, it could be a lot. It could be a small amount. It could be in the middle. I'm just saying dumb things on a Friday now. But we'll have to see what sort of selling pressure that brings. And if people are willing to sell at this price point, is the other question. Obviously, they were previously willing to sell down to this price point, right? So that's certainly been the case in the past. But to the extent to which institutions or large-scale orders could continue to come in and could help stabilize the price, or at least counteract any selling pressure from that lockup, that would be interesting. And from a charting, like a pure SoFi the stock perspective, the degree to which it can hold this uptrend resistance line and or bounce off of this purple zone and or hold at that 1465 supply and demand zone, those will be what I'll mostly be looking closely for. And if it falls through that 1465, like I said, to me, that's uncharted territory. We don't really know what to expect, so we'll have to keep a close eye and just chart it as we go. And then if the MACD has a bearish crossover, that's certainly going to tell me that the momentum has switched. This was a nice but short-lived bullish momentum trend, and now we have to get in the mode of like, okay, when is the bearish momentum going to die down? How quickly can it be quelled? Where's the floor here? So on and so forth. But it's all speculation at this point. We'll see how those narratives play out next week in real time, and we'll just take it from there. All right, well, I hope you have an enjoyable weekend, and I hope that even though it was a challenging day and a half or so here, that your trading week went well. We're certainly learning a lot as we go. All right, folks, I appreciate you watching. I will see you in the next video.